So, Wall Street came back from a long weekend on January 20th, 2026, and boy, did it walk straight into a firestorm. We saw a huge market sell off, honestly, the biggest we've seen in months. Let's dig into what happened, why it happened, and what it all means for the week ahead. It was a total bloodbath. The market just got hammered by this massive wave of selling, with the Dow at one point plunging almost 900 points. I mean, this was a classic risk-off day where investors were just scrambling to dump anything and everything they saw as risky. It really sent a shockwave through the system. And here's where the Dow finished up for the day, down over 870 points. That's a 1.76% drop. To give you some perspective, that's the worst single day the index has had since way back in October of 2025. Ouch. And the pain, it didn't stop with the Dow. The broader S&P 500 actually fell even harder, dropping more than 2%. Now, what's really important here is that this pushed it below its 50-day moving average. That's a key technical line that traders watch really closely. And breaking below it, well, it's often seen as a bad sign, a signal that there could be more trouble coming. And then there's the Nasdaq, the tech-heavy index. It got hit the hardest of all, tumbling almost 2.4%. This tells you that the market's favorite stocks, those high-flying tech names, were right at the heart of this sell-off. So what on earth triggered all this fear? Well, you can trace this entire market meltdown back to one single thing. Trade war fears are back, and they're back in a big way. Specifically, we're talking about new tariff threats from President Trump, and it's all tied to his ongoing ambition to acquire Greenland. And these threats weren't vague. They were very specific, and they were designed to hit where it hurts. Over the weekend, the president started talking about a massive 200% tariff on iconic French products. This was a really clear warning shot aimed at European leaders, and it definitely made investors realize he's not messing around. This wasn't just about France, though. The administration put out a list of 8 key European and NATO allies: Denmark, Germany, the UK, the Netherlands, the list goes on. And the reason? To put intense pressure on them to back a US purchase or control of Greenland. The plan itself was laid out in 2 really clear steps. First, an initial 10% tariff would hit imports from these countries starting February 1st, which is just over a week away. Then, that would jump dramatically to 25% by June 1st if a deal isn't made. So that created a very real and very close deadline for the markets to start freaking out about. And right here, you can see the direct impact on this sector that really led the market down. Major tech companies got absolutely crushed. Nvidia down over 4%, Tesla falling 4.2%, and Broadcom took a hit of more than 5%. See, when global trade gets threatened like this, these are the stocks that get sold first because their supply chains are so complex and global, and they rely so heavily on international sales. It makes them incredibly vulnerable. Okay, so this huge pivot out of stocks triggered a really classic market reaction. As all this uncertainty spiked, investors didn't just sell, they moved their money somewhere else. And this whole phenomenon is what we call a flight to safety. So what exactly is a flight to safety? Well, it's pretty simple. It's when investors sell what they see as high-risk assets, like stocks, and they buy things they see as safer. During turmoil, like the threat of a trade war, money just flows away from things that need economic growth to thrive and into assets that are expected to hold their value no matter what happens. And the difference in performance between assets today was just stark. Look at gold, the classic safe haven asset. It surged to all-time highs, getting above $4,700 an ounce. But at the same time, Bitcoin, which some people think of as a modern safe haven, well, it acted just like a risky tech stock and sold off hard. So here's the bottom line. On this day, the old school playbook worked perfectly. Safe havens like gold and silver, things that have been valued for centuries in chaotic times, they hit record highs. And on the other side of the coin, you had the risk assets, tech stocks, and yep, in this case, Bitcoin. They all fell together as investors just shed anything and everything tied to economic growth and stability. So, this one day of chaos has completely changed the feeling in the market. Everyone is on edge now. Investors are just anxiously waiting for the next headline that could send things tumbling all over again. And to really put today's sell-off into context, think about this. The S&P 500 and the Nasdaq are now both slightly negative for the year. That's right. All the progress they made in the first few weeks of 2026 was just, poof, wiped out in a single trading session. And this week is far from over. There are several huge events coming up. We've got Netflix earnings after the bell today, which is going to be a massive test for the tech sector. Then tomorrow, President Trump is scheduled to speak at Davos. And of course, looming over everything is that February 1st tariff deadline. If there's one big thing to take away from today, it's this. After a nice period of calm, market volatility is back. And it's back with a vengeance. And there's actually a way we can measure all this fear. This is the VIX, what they call the market's fear gauge. It spiked all the way to 21 today, which is its highest level in 8 weeks. When you see a high VIX like this, it means investors are bracing for more wild swings ahead. At the end of the day, this is really the whole story. Earnings, economic data, none of that mattered today. Today was all about geopolitics and policy. It's just a powerful reminder that a single announcement can completely take over and shift the entire market narrative in a heartbeat. And so that leaves us with the big question on every single investor's mind tonight. Was this just a one-day overreaction, a chance to buy the dip? Or is this the start of something much worse, a bigger correction driven by a brand new trade war? The next few days are certainly going to be interesting.